What's up, everybody? It's your boy Kai, and today, as you can see in the description, we got some real information to talk about. As you guys can see in the description, it says, do not keep your money inside the bank. And I know that title confused a lot of people when they saw that, and you guys like, what? I have a bank account, and I have my money in my bank account right now. Why wouldn't I put my money inside my bank account? Well, actually, in this video, we're going to be talking about, especially for business owners, on why it is important to not keep all your money inside of a bank account. And one thing that people, before we go ahead and start the video and everything, get started on everything, make sure you like and subscribe this channel. That way you'll be updated every time your boy drop a fire video. All right, so let's go ahead and get on to it. Why shouldn't we keep all of our money inside the bank? Well, majority of people, what they don't know is that the bank is a business too, right? Just how we create our businesses, the bank is also a business. What do you mean by that, Kai? Well, a lot of people don't know that banks, what they do for business is they offer you something like a checking account, They make money off you basically depositing inside of an account that they have. And a lot of people wonder, what do you mean by that? How do they make money off us? I mean, off me depositing money inside a free checkings account. And I'm gonna go a little bit more in detail inside this video exactly on what they do. So with banks, and a lot of people don't know that banks offer life insurance policies, right? People don't know that banks offer life insurance policies, but the way they offer them, they don't market them out to you guys individually. All right, they don't market it out to us as a life insurance policy. What they market it out to us is as a checkings account. And every time we open up that checkings account, what happens is when we deposit money inside that account, they're then able to take that money that we have inside our account that we have deposited and take that and invest that 10, 12 times, all right, the amount that we have inside the account. And also, they don't catch me on this, y'all, because I don't know if this is fully right, okay? But I'm going to say this. So they have something in place, and I don't know if it's still in place, but it used to be to where whatever you deposit inside your account, whatever you deposit inside your banking account, that the bank is only liable to keep 10% of that. So that means if I deposit something like $10,000 inside my bank account, and I only have I deposit something like $10,000 inside my bank account. The bank is only liable to have $10,000 inside of my, $1,000 of my money inside. They're only liable to that. So the bank is actually, like I said, they're a business, and they're investing the money that you put inside the accounts into other projects like real estate, like loans, like other things that you wouldn't even think, probably some things that you wouldn't even sometimes agree with. And you wouldn't even know that they're doing it in the first place because they do it secretly, okay? Like I said, it's a reason why they market your checkings account to you as a free checkings account, when in reality it's a whole life. It is a insurance policy that is gaining interest, and also they're able to lend out loans, do projects like real estate, and even more. With just you depositing money. If there were, let's say we take one Pacific Bank, right? We take one Pacific Bank, and everybody decides to take a big amount out at the same time of the same one bank. Everybody decides to withdraw their money. 9 times out of 10, the bank is not going to have all that money that the people need, okay? They're not going to have all that cash on hand. Why? Because, like I said, they invested into more projects, right? So as a business owner, we should be looking at more ways on investing our money. When the bank gets money inside of their account, guess what they do with it? They then start investing into other projects, like I just got done saying. So the number one thing that, let me go ahead and talk about this. Oh, now that you just heard me explain that the banks are basically just in business themselves too, I know a lot of you are wondering, well then, okay, Kai, where do I put my money at then, Kai? If I don't put my money inside the bank account, then where would I put my money? Where would I invest my money at all? The first thing I would say is I'm not going to personally give you guys, because I can't personally tell you where to put your money at, because the only reason why I would say I can't tell you personally where to put your money at is because people like different things. All right, people are in tune with different things and different studies. So what I can do is advise you guys on the best things that the top 10%, 5%, and also what I follow. And hopefully you guys can take heed to that and also use that for your own good. You know, if you don't like it, then, you know, I would just say find something else more interesting in business. But let's go ahead and talk about this. The first thing I want to go ahead and talk about, besides putting your money inside a bank account. Now, mind you, keep money inside your bank account. I'm not saying you pull all of your money inside your bank account. Your bank account is meant for reasons, all right? Your bank account is meant for transactions, and your bank account is also meant for, and your bank account is also meant for emergency purposes, all right? So if anything happens, you know that you have that emergency fund inside this bank account. And you also know that you plan not to do anything with that money at all, so it can stay inside the account. So if anything happens to your business, and mind y'all, I want to let y'all know this, that it's very important to have that account when it comes to savings with that business account, all right? And the only reason why I say that is because it's a lot of businesses that give you the instance of Corona, right? A lot of businesses went out of business. What businesses do you think went out of business faster than others? Those were the people that did not have money saved for the hard times, all right? They did not have the reserves saved for a hard time, so they could not last throughout the hard time. Because one thing that happens, and I know is that throughout the hard times, good ends up happening, all right? So all you have to do is stick throughout that hard time, all right? Have enough money within that reserve and that savings account to last through the hard time to get to the good parts, all right? But all right, let's go ahead and talk about this. The number one thing I want to go ahead and tell you guys that I would aim for, besides putting all of your money inside your bank account, is definitely do a little research on people that are investing their money into things that are growing, period, okay? That are growing, period. Things that, assets that they do not have to technically work hard towards or do anything towards, they just move their self, right? Kind of like Warren Buffett, right? I know that's a kind of, you know, he's a billionaire and everything like that. And a lot of people don't like the way he invests. A lot of people do, all right? But one thing I know about Warren Buffett is that he doesn't do any hard work. If anything, he does smart work, right? Because everything he invests into does the hard work itself, right? It grows itself. He does the study on it, right? He does the research on it, but it grows itself, right? So the number one thing I would say is do a lot of research so far as, man, stocks, crypto. I want to name a couple of things up on here because there's a lot of things that are growing. You really want to study all of these things, because one thing I want to say is, if you do not move with the future, you are going to get left behind. That's one thing I say all the time. You do not move with the future, you are going to get left behind. And just like people that used to have, people that used to have flip phones, right? They never thought that they'd end up switching to the touchscreen phone. Oh no, I'm cool with this, until they got forced to do it, right? Until people end up getting forced to use the iPhones or use the touchscreen phones, right? So when are you going to take heed to this until you are forced into this new era that we're moving into with technology and everything like that, okay? So definitely do some research on those topics. And also I have another keynote inside of this video too. Now, a lot of people saw me talk about the whole life insurance policy, right? And this is kind of similar to the banks. The banks invest their money. They actually have a life insurance policy, and they get these accounts, right? And these accounts are growing at interest, and they're also able to pool loans against the amounts that we deposit. So now check this out. The most important thing of this video you're going to realize is that we need to become our own bank. We need to become our own bank. If the bank is in business, right, they're a business. We look at the bank as security. The bank looks at their self as they're just a full out business. All right. We need to carry ourselves exactly how the bank carries. When we go in and we deposit money, if I go in and deposit $10,000, the bank automatically looks at that $10,000 and they're automatically thinking, what are we about to get ready to invest these into? All right, what are we about to get ready to invest this $10,000 into? Or maybe we're about to get ready to borrow against this $10,000 and invest in something else, right? Maybe a real estate project that I want to lend out $200,000 for, or something similar to that, right? But regardless, they're going to be making money off the interest. That's what I need most people to understand. And a lot of people are wondering, how do we become our own bank? Well, it's as simple as this: whole life insurance policy, right? Some people with whole life insurance policies, a lot of people do not know when you get a whole life insurance policy, some people are gaining up to 6, 8, 9, and I've also seen people get up to 12% interest up on their money, right? With becoming their own bank. So they become a whole life insurance, they get a whole life insurance policy on their self, right? They will fund this account. Mind you, the account is growing. Let's just say the account is growing at 9% interest. If the account is growing at 9% interest, and also just like the bank, I can decide to pull a loan out against myself. If I decide to go pull a loan out against myself and make a purchase, let's say I wanted to make a purchase on a car. All right, we're about to get ready to say a car, $30,000 car. I wanted to make a loan against myself with the car. Here's the benefit with it comes with being your own bank. Because that loan costs $30,000. Now, the usual way of going to get that $30,000 is either you go to the dealership and I want this $30,000 car. I apply for it, the dealership gives me the loan, and I take it on. Or people go to a credit union and they say, hey, listen, which is a bank. They go to a credit union and they say, hey, listen, I want to buy this car out full right. The credit union then gives them $30,000 written inside the check, and they go purchase the car, and they have the loan left off with the credit union. So they're still paying the bank, right? They're still paying the bank back. Now think about this. If we're paying ourselves back, if we have our whole life insurance policy and we borrow against ourselves, we borrow that $30,000 against ourselves, and then we go out to purchase that car. First of all, it is not taxable. All right, it is not taxable because it was under a whole life insurance policy. It's under an insurance policy. That's one thing that is important about the bank's businesses that they don't tell you about. They are not getting taxed for anything. Majority of what is lended out is debt. All right, so we go get this car for $30,000. We borrowed against ourselves with this whole life insurance policy. Mind you, our insurance policy is growing at 9% interest. Now, let's say we decide to pay ourselves back instead of the bank now, all right? Because the bank is going to charge us interest, right? On top of that $30,000 that we borrowed. Now, I am paying myself back. Now that I am paying myself back that $30,000, mind you, that note that you were going to be paying every month on that car note, you are now paying it towards yourself. You're putting it back inside the whole life insurance policy. As you're putting it inside the whole life insurance policy, that whole life insurance policy is now gaining 9% interest on everything that you put back up in it. All right? So just imagine that. After you end up paying that $30,000 off back to yourself, would you have not gained more than you put into the account? The answer to that is yes. But dealing with banks, we would have paid them off plus interest. The whole point of this video is to definitely become your own bank. And it is multiple ways to be able to invest in other things than the bank. What I advise on this video is to just do more research. These are things that I know of, and these are things that I know that top 5% of rich people use in this world to be able to get on top of the industry, okay? I hope you guys enjoyed this video. This is going to be it for today. I'll probably be coming out with a couple more videos today just to broaden you guys' thought a little bit, but that's going to be it. Make sure you like the channel and subscribe, and I will see you guys next time.